What's up? Welcome to a new update, and today in this update we are briefly going to touch on the Fed meeting from yesterday, as we can see some serious reactions on the markets already. So that's what we're going to discuss in this update, and we're going to look at the price action of Bitcoin, of course. But before that, make sure to subscribe and like the YouTube update, and also make sure to follow me on Twitter and Instagram, where you can find daily content on the markets, as I'm sharing my view and analysis on all those platforms. So yesterday, well, approximately around this time, we've had a Fed meeting, and the results came out at 8 p.m. Central European time, and after that Powell also did a presentation and answered some questions regarding the actions that the Fed wants to do. Core solutions or answers that we got out of it was the actual fact that the interest rates were unchanged. They are not looking to hike the interest rates right now, but most likely they will be doing that when it is in March or April. Also, what they are doing is the QE is going to be reduced even more, as they want to end QE during the coming months as well. Now, QE is the actual reason why we have been seeing a pretty heavy increase of the balance sheet, and why we have actually been seeing an increased level of inflation taking place in the US, but also in the rest of the world. And that is, well, we can thank the Fed for that because of the insane amount of money printing that they have been doing. When it comes to the balance sheet, after QE ends or their first rate hikes are going to appear, they want to do quantitative tightening, which is reducing the balance sheet. However, he says that it's a quite tricky one, and it takes time to actually implement anything to reduce the balance sheet. So that is the summary about the event taking place, or what the event was yesterday and the outcome of the Fed. Now, he also stated something about the inflation. First, he initially said inflation is going to be above 2%, and we expect it to be going down during the coming year. However, at a later point in the presentation, he actually mentioned that the inflation will probably even shut up some more and will be here for a longer period. And if you recall correctly, if we have a high inflation, it will be reducing the underlying value of the debt that people or countries or governments have. So, as a matter of fact, governments and companies would love to have an increased inflation, as if you have a high number of debt, the value of the debt will decrease over time, and it's easier for you to repay those debts. Now, he also stated something about the labor markets, in which he claimed that the labor markets will not suffer from high inflation. But if we recall correctly, the actual issue here is the middle class, that are the working people that have a regular salary and have a very hard time to survive, as everything that they want to buy or that they have to pay to actually survive, which is food and gas and stuff, is increasing in such a fast pace that their salary can't keep up. And then we've got something like CPI or anything related to the inflation numbers, in which they claim that the inflation is approximately 6 to 7%. But if you calculate it yourself, the inflation might already be between 15 to 20% or anything close. So the presentation was quite full of lies and contradictions, and not the real story about what's going to happen. I think that what's going to happen is that we are in the end game of the markets. The chances that we can have one more run are still there. Right now the sentiment is so low that having a potential bottom on the equities quite soon might make chance, in which we reverse quite fast. As what he wanted to say too is that the Fed or the expectations are what the Fed is doing, that it will calm down the markets, which technically hasn't been happening on Bitcoin, despite the fact that the US dollar has been showing strength. And right now I'm watching it, it has made a new high since 2020, mid-2020. So the dollar is showing strength, which is not strange. If you're going to hike the interest rates, if you're going to reduce the balance sheet, the dollar will become stronger, which is just simple math and economics. So that is something we can see. So the other currencies are dropping. What we also see is the fact that the yields are going up. Not the interest rates, but the yields. And the yields is something that they can't control. Yeah, if they keep on buying government papers, they will. But they said that they are reducing the government papers. So we can actually expect the yields to go up even more in the coming years. And when the yields are going to go up, that will have a big impact on the markets. But right now, they might be getting into a resistance quite soon, or might be topping out relatively soon, in which I generally see or expect a bounce to be taking place on the markets. But overall, Powell didn't say anything at all. He said a ton of words, didn't say anything. It was full of lies and also full of skeptic answers without any real conclusion, like soon or maybe. Those are not the answers that you're looking for, especially when the market or the world is waiting for your decision to be made. So what about the markets? Let's head towards the current movements of Bitcoin and let's see what the yields are doing before we're ending off this update. So let's head towards the charts. So as I said, the yields are the one to watch. If the yields are going to have a reversal of this entire trend, that is when the real shit show is about to happen, as then it will also have a huge impact on the real estate markets. And the real estate markets have a market where mortgages and debt is on a quite high level. And if you recall correctly from 2008, that is a destructive thing to take place. So what do we see on the rates at this point? Still trending down. Overall, if that is going to switch in the coming years, that is going to have the big impact that we were assuming or that we expect to be taking place. So it's something to be, well, let's put it in this way. It's something to take into account. What we see is that the yields have been running up. So an increasing yield could be showing more uncertainty on the dollar, or should be seeing more uncertainty on the economy, should be seeing that over there in that period of time, potentially people are rushing into other assets like gold and Bitcoin. Now in 2020 and 2021, we've seen the yields go up even more. That was a nice correlation with Bitcoin. We've also been seeing it in the later stage of 2021 when Bitcoin has a run. We've seen strength on the yields too, and now we see weakness on Bitcoin and the yields are still going up. So that is the change, because right now there is certainty about the fact that the dollar is going to be, or the balance sheets are going to be reduced. So the strength is lying into the dollar at this stage and not in risk on assets like the equities or tech or Bitcoin at this point. So that's why you see the difference in the chart in itself. Now if we use TA, currently we are having a resistance that we try to flip. If the yields are going to drop back down in this range, party time continues. We can have a beautiful run. As when we're looking at the Nasdaq at this point, it clearly has to break above this level here. If we break above the level of 14,500 points, I'm assuming we're going to have a run to 15.4 or maybe even 15.7, and that's when we can have a party time for Bitcoin as well, as Bitcoin is still showing weakness. But more on that in a little bit. What do we see more? As we just stated, the dollar is running up. We had a beautiful retest or close to it in the downwards move here, so also those beautiful support resistance flips actually work. And in this case we have a bounce and we start running, in which this entire move is a fake out beneath the range, and you can see that we test the other side of the range. However, also approaching resistance here, as this entire block is one. If that one cracks, I'm assuming we're gonna have a run towards 99 points. But this strength is due to the fact that the Fed has made some decisions. Now, because of a stronger dollar, assets like Bitcoin have a hard time in moving upwards, as it's just the literal opposite of the dollar, right? So when we're looking at Bitcoin at this stage, and I don't know why we're currently having a different chart, Bitcoin is still in having this downwards trend and is seeking for support or higher time frame buyers to step in, right? So what do we see? We've had this crash, and in between this crash we've had one period of consolidation before we started to drop even more. So this entire period here of consolidation is becoming a reference point for sellers or for people that are feared, and as we recall correctly, the market is still heavily feared. Because of that, they will seek an answer to actually start selling their position, and this is where the first area where they will do so. as the next area will be 40.7, and which we have been seeing. We had seen the volatility during the Fomc meeting, and that was actually leading into us this run up and the reversal afterwards. Right now, when we're looking at the 4-hour time frame, I would definitely say that we are seeking for buyers to step in which the assumption is that we're going to test lower levels again. Clear support at 34.4. I assume we're going to test it in this region again to see whether there's enough volume stepping in to actually continue having some upwards momentum. That is what I most likely see, as beneath 38k I don't have any conclusion to actually become bullish on the markets at this point, unless we first of all start to flip 37.2, which we haven't been doing, and if that happens, 37.2 to 37.5, we might be having some momentum towards the resistance again, but definitely not rushing into positions. If 36k is lost, I'm assuming we're going to have a downwards fall, and then I'm seeing a test happening at those lower regions. So at this point, Bitcoin is still trending south, and we are seeking for a conclusion or a support to be hit and a bullish divergence to be created as well, which might be the case. But overall, I think it's still a period of time where we should be cautious, especially given the fact that we just rejected at 38k, and because of that, might be having some more downwards momentum to be taking place. I hope you have enjoyed this update. I'll be back tomorrow with 2 new ones. Subscribe beneath, follow me on Twitter and Instagram. Ciao.